Right, so I'm gonna give you guys a rundown about what I saw on gold, especially on Friday, um, as the opening of that monthly candle opened. Today it's Sunday, the 3rd of March. So beautiful, beautiful, beautiful moves happened on Friday, especially for the past 2 weeks. But I caught a beautiful trade on Friday, and I want to go through the step process and the psychology and what was going on in my mind that led up to this um, events of actually finding those types of trades. And it's on gold, and this can happen on any single market. So it's not only on gold, this can happen on forex pairs, indices, stocks, your other derivatives, and other CFDs that you can trade. So yeah, let's just get straight into it. So these are some screenshots that I took. um, I think I took these in February. So basically what happened is that I started looking at gold in the middle of February, but I wasn't getting involved in it. What you see is a screenshot of what the gold price was doing in the middle of February. This is a 30-minute time frame, and this is the same thing, and this is a daily chart. So gold for about 2 months has been in a phase where there has been no delivery. And if you look at the daily chart, which is the screenshot on the right, you can actually see that this price action right here is exactly the no delivery that I'm talking about. So the whole of January and pretty much all of February, it has been in a state where it's just going sideways and backwards. And obviously, this is probably due to the fact that it reached an all-time high. It reached this level, and once markets tend to reach a all-time high, they tend to reset, or what I call they would move quickly to an all-time high, and then what happens afterwards is that the chances of that trend or that move sustaining itself decrease. So what would happen is that it would go to a point of equilibrium, or it would actually like reset and just consolidate. So what I mean is that it would move up, and then once it moves up, there's a quick impulse that happens. It market moves so quickly that what would happen is that it would just reset itself and go sideways, or it would just reset itself or go in a downtrend. This is why when markets go to an all-time high, people look to sell, which is exactly what happened. And that's what happened in January and February. It's been going sideways and backwards for 2 months now, or a month and a half, sorry. So this is the same price action you're seeing here on the 30-minute time frame, and that right here, in fact, I can highlight it over here. It's around the 2nd to the 14th. So pretty much this price action over here is what you're seeing in this whole picture over here. So that's exactly what's happening. And actually, I should probably erase it like this. And this also confirms this. I like to use the sentiment viewer. If you guys watch this channel, you will know what this is. I'm not going to tell you what it is. Go watch this channel. This is the sentiment viewer that I like to use a lot, and obviously this confirmed my bias that it was 56% bullish, 44% bearish. So it doesn't meet that 70 to 80% criteria, which means that there's no trend that's been established, which is why you're seeing it going sideways and backwards a lot, where it's breaking down. You're thinking it's about to make increasing protected highs, but then no, those highs get interrupted by breaking up again. You think it's going to make increasing protected lows, but then no, those lows get broken. And what happens is that it gets broken, then it breaks up, which there's a potential sign of accumulation or bullishness, but then that fails with this massive drop. And obviously, this massive drop is that news break, or it is red news that happened on this day, which caused the market to move rapidly from one area. And this is not really a trend, this is just a big move. So, a lot of people at that time were looking to sell, which is when I started watching. So this screenshot I took on my phone, and these other screenshots, I think I took them on my laptop. So from this moment when that red news happened, that's when I actually started watching gold, specifically gold, because the same thing happened around the 7th of October with that whole news of Israel and Palestine. The same thing happened where Gold was going through a stage of no delivery. It was just going sideways and backwards. It was consolidating, and then boom, there's red news that dropped the market on, I think, on the Friday before the news dropped. And then once the news that a war was taking place in the Middle East or the Levant area, is that gold prices literally just skyrocketed that whole week. In fact, I think that whole month, it just absolutely went into this bullish run. So this is when I started watching for that potential bullishness, and there was no sign of bullishness on this time frame. But this is the beautiful things about trading, is that you get to a level where you the most successful traders tend to watch for things to happen instead of looking to get involved. Because when you look to get involved, you get involved in areas where you shouldn't be getting involved in. And what happens over time is that you end up taking every single area. And when you take every single area, you're going to get random results. And which is why most people don't make a sustained amount of income from trading long term, is because they take every single trade and they don't actually understand that there's certain price action that they are not supposed to get involved in, which I would argue is like 70 to 80% of price action on markets. And you're going to find that there's only going to be like 10% of what you can get involved in. So that's what I did. And at that time, it absolutely started to catapult again. Or not again, but it started to move up, create protected lows. These lows are protected, this low was protected, and it created a bullish run, which ultimately went back to this area over here. And the indicator started to change. It started to show more of a bullish sign, which at that point of view, I suspected that this market, in fact, I think from this area around the 21st, because yeah, from the 21st of February, I actually anticipated, and these were actually screenshots I took from the Instagram account that I made on DONSLUVSFX. You can go check it out. I actually spoke about gold being potentially long in this area. This is the same screenshot on TradingView, but you can see I took it on my phone here. So this is the exact same thing that you're seeing right here over here. This exact same thing. And what I did was that I spoke about the potential bullishness on this instrument and how price is likely to go long. That was my anticipation from the time that this red news had occurred. There were a lot of increasing protected lows. Obviously, I had the black indicator on. So this black indicator, these lines over here, the MintFX structure indicator, it just indicates structure. So what was happening, that structure indicator was indicating increasing protected lows, which means obviously price is going up. And when lows are protected and when price does not return to those lows, it means that money is getting in and it's trying to sustain that trend. So the bias that I had was that if that could sustain itself and if price would break above this level, which is why I highlighted this area over here, is because this is an area of where price is relatively equal to this high over here. I highlighted that over there, and that was the last point where the market moved rapidly. So I would anticipate that people would be looking to sell in that area, hence why you could see that there's a large amount of people going short, about 70% at that time, which is why I like looking at this. This is the sentiment indicator, or the institutional one, and this is more of a retail sentiment indicator. And often these two, when they contradict each other or when they're different from each other, that's when I know that okay, there is a potential trend that's about to form. So this being at about 70% short, I could already see that the cloud of liquidity rests above here. That was my bias. However, I wanted to wait for that bias to occur, and obviously the way you wait is by letting price play out, because at that time that this was occurring, it shifted back to 57% from about, where was it, 64. So that was when I wanted to wait and just see that okay, let this bullishness confirm itself, and then if price had to like come here and break down again, then I would just stop watching this pair because there's nothing for me to touch. Because if I would want to get involved in a situation like this, yeah, I could sell and make some money going down, but then that's what I'm talking about when you take every single price action and when you take every single thing that you see. Sometimes you just got to know when to not trade. And even though there's probably a beautiful movie you're looking at during the red news, you could make that opportunity. Those types of market conditions where a market will move like this very quickly, that's very random. You don't know whether if the market's going to move like this or like this. You can only base I can only base my system based on increasing protected lows, increasing protected highs. And that's actually where the real money is made. And that's where the true liquidity is. So that's why I wouldn't have done that if it had failed. But however, I decided to wait and just sit on the sidelines for something to form. So yeah, and there you go. So you can see this part over here is this part right here. So from this area over here, you can see that I waited for that anticipation of bullishness just because everything is lining up. The exact same thing was happening on the 7th of October, but I wanted to confirm that by letting that price play out. And that's exactly what happened. As you can see from that point of view, the price just increased. It did not return or it did not go down like most retail traders anticipated. If you look, what 70% of retail traders were going short or were selling this, and the price just ended up going further. I mean, it's when did this occur? On Friday, and it's Sunday today. So literally, this is how markets and how trends sustain themselves. And this bias was based on the fact that if I go all the way back over here, this is just based on the fact that, as you can see, this daily consolidation period that happened for 2 months, this came from a price which has been going bullish for a long time. In fact, gold has been bullish for like 30 years if you look at it. In fact, not 30 years. It's been consolidating for 30 years and it started to make a bullish run from about 2007, 2008 on a bigger time frame. So what is the likelihood that all of a sudden now the gold price is just going to break down and go short? It's not going to happen. What is most likely going to happen on lower time frames is that yes, there are opportunities to go short, but you need to understand what that you need to put that context within a bigger time frame, and you need to see the same thing on different time frames for you to get the story. The fact that this is happening, most traders will think, okay, it's time to go short, but this whole thing is happening within this whole thing over here. Not exactly this whole part of a year, but you get what I mean. It's happening within a bigger time frame that's going long. So why would you want to look to sell in that case? And yeah, you could sell because it's a bigger time frame, but you need to understand that overall, what is happening on the grand schemes of things, especially with gold, is that prices want to go long. It's very simple. And if you find yourself on the wrong side of price, that is when you're going to end up in the dumb money. And that's why terms like smart money and dumb money exist. Basically, what smart money and dumb money is, well, I'm going to explain it in the DONSLUVSFX way, is that when you have a trend that's established and you have an understanding that, look, this trend is going like this and this and this and this and this, you keep buying, and it's going your way, and then you end up holding your trades and not having a specific set take profit where you would partial out or you would take out on those trades, because obviously markets are not going to go up forever. They will come down, they will reset, they will go sideways again. So then what happens is that people cannot identify when those stages occur, when a trend is, when a market is trending and when a market is not trending. They cannot identify and they cannot differentiate between which price action is suitable to trade and which one is not. And that's what happens, is that they end up making money from the price action that is delivering. The context is there. Same thing that happened in COVID in 2020. There was a specific context that happened in 2020, and in 2021, that context was not there. So a lot of people were trading in the same mindset or the same way, thinking that context was there. But they don't understand that markets go through different contexts at different times. Money enters in and out of markets cyclically. So what would happen is that they would make a shit ton of money in 2020 and they would lose all of that in 2021. So all that money that was made just goes back into the hands of the smart money, the people who are informed about markets. And the dumb money makes all their money, but since they are greedy and since they are weak-minded in their system and they don't have an understanding about where to buy and where to sell or when to not get involved at all, they end up losing everything again. What they had made, it ends up going back to the people who actually understand how prices move. So that's what I wanted to add as well. So again, just to confirm this again, and about this time, I kid you not, guys, this was about 69%. So now it's bullish. Now it's entering that 70% to 80%. So now for the next, I think the whole of March, I could be bullish on gold. I think it's gonna reach an all-time high of gold. It's gonna surpass the $2,150 level. That's my prediction, because now that money is re-entered again, and the all-time high is potentially going to be a target, in my opinion. This is not financial advice, but anyway, if you want to take that, that's fine. But this target right here, this price action, right, this price point over here is going to be a target, in my opinion, if this holds, because everything is looking to hold. So for the next 2 to 3 weeks, maybe in the middle of March, maybe at the end of March, it could hit, or it could go further than $2,150 level. That's what I would anticipate, and that's what it's gonna look like. That's what's gonna occur, because everything is starting to hold. The sentiment viewer is indicating about 70%, so there's bullishness that's coming on a longer time frame. Retail traders are going 81% short on this. So there is a massive cloud of liquidity above this, because everyone is looking to go short, because there's that whole thinking amongst traders where, like, once the price gets too high, okay, now it's time to go short. And what happens is that, again, cloud of liquidity, money, that's where real liquidity in a market lies. So then this trend just sustains itself until this would start to drop, and then you'd see it will start going sideways and backwards again. And then that's when people realize, okay, I think it's time to go long. And then when it's time to go long, when this goes long, then that's when that sideways backwards movement happens again, and that's when people lose money, like they did when they were trying to sell over. When they were trying to sell. I'm trying to get the pin. They were trying to sell over here. It broke their sell point over here, and they were trying to sell over here again. They were trying to sell over here. They were trying to sell over here. They were trying to sell over here. Can you see how these points are in line with each other? And there's that whole support resistance mentality. Look at this. Support and resistance. That whole thinking. But there's more of a resistance than there is of a support. So people would think it's time to go short. And then once this broke, people are still looking to go short here. People were probably still going to go short over here. People are going short in areas they're not supposed to be going short in. People are going short. Everyone is going short. Money is being engineered. There is liquidity to the top side. Hence why the markets skyrocketed. And hence why I believe, or I have a bias, that over the next 2 to 3 weeks, gold is going to increase in its price. So let's continue. So the trades, right? These are a couple of trades I took. It's the same entry model. I speak about the entry model. It's on Instagram. I made a post about it. The same old, you know, having your time frame of entry, which in this case was the 1 minute, and then having a time frame for context, which is the 30-minute time frame. So that was what I would do, and obviously I'd have a time frame for validation for like supply and demand zones, which is the M4, so the 4-minute charts in this case. And obviously, as you guys know, I like the usual ICI entry, enter when the price buy stops the previous high, put the stop loss below here. I did put the stop loss below, but obviously I moved because obviously I like to increment the price as the price goes a certain point. But yeah, I keep explaining this all the time. I don't want to explain the entry criteria because I've said it so many times. There's an entry criteria right here. Look, impulse, correction, impulse, ICI, boom. There's even another one over here. Boom, boom. You can enter here. So there's an entry over here. There's an entry over here. I took the entry over here. Boom. I took the entry over here. There's even another impulse, correction, impulse, enter. Impulse, correction, enter. There's like, can you see what I'm talking about? And if you don't, you got serious work to do because I've made so many videos about this. And within the 30-minute time frame, because that was that same trade I just showed you right now. So this is the 1 minute chart. So this whole thing over here, is just this little speck on the 30-minute time frame. And this trade, I think it tripled my account. So imagine literally just this whole slither. Why am I saying this whole slither? This small part over here. Only the small part of this price action I got involved in. I did get involved in over here earlier on, but I got stopped out. And you can see I got stopped out in a price action that was doing what? Sideways and backwards. Look at the difference between this trade and this trade over here. Is price action going sideways and backwards over here? No, it's trending. And it is so powerful when this aligns with lower time frames, because that's when you can find those entry criteria, what I've mentioned over here. You will only find setups like this, boom, impulse correction in a market environment where your higher time frame of context is matching with that lower time frame of entry. You will only find that when your higher time frame is doing this, you will find setups, such as that impulse correction, and you enter like there on your lower time frame, if that was a lower time frame. Whereas if you would do that in a market environment where it was going sideways and backwards, sideways and backwards, sideways and backwards, imagine if this was a higher time frame. On a lower time frame, yes, you'll probably find the same setups, but those setups won't hold because look, the chances of those setups not holding is very high because it's in a market that's going sideways and backwards. And hence what I said over here, I took a trade over here, but it stopped me out because as you can see, from about the 22nd of February to about the 28th of February, you can see it's just going sideways, 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 sideways. And yes, there's moves in there, but we don't look for moves. And this is exactly what I'm talking about with trading. It comes with experience and it comes with knowing when to get involved and when not to get involved. And when you do get involved, you obviously need a certain risk management when you're taking those trades. But within this stage one, as I would call it, this is the stage one where it would be going sideways and backwards, sideways and backwards. And the chances of you catching setups like this over here is like 20%. So any trades that you take in a market environment like this, it's going to be medium to high risk. That's what that means. It just means that yes, you can trade because this is obviously a 30-minute time frame. But what happens is that your setups will most likely hit break even or hit stop losses. So you'll probably be taking -1, break even, -1, break even. And when you add up all those trades, if you do take a lot of trades in a price action like this, you're gonna see you will lose money over time. You'll burn your whole account. Like, trust me, I've been there, guys. Like, I was trading like this in 2022. I didn't understand what price action to get involved in and what not to get involved in. And once you actually realize that this is the price action, once you realize that over here, this is a type of price action that you want to get involved in. This right here is the stage 2. So markets move in stage 1 and stage 2. Stage 2 is the market that you want to trade in. And this 30 minutes push up over here is exactly this whole thing on a 1 minute. And this is beautiful setups. You can find setups over here. Look at the impulse correction, impulse setup in a market condition that is trending on a bigger time frame. You can find a setup right here. Boom. Setup. Over here. Setup. Over there. The long one. Setup. Right there. There's a setup right there. I actually took the setup, as you can see. Ugh, man, what's the thing doing now? I took the setup over here. This setup right here, I took it. Boom. Setups. And you could see each and every single setup, the chances of it, having a +1 or +2 or even doubling and tripling or quadrupling your account, it's now, it's increased. Now it's at a point where your trades are no longer medium to high risk. Now they are low to medium risk, because yes, there's still risk involved, but in a market environment like this, it's medium to low risk. So that's basically how you would find trades like that, is that you would obviously use certain tools that would help you, and obviously you need to be trading for a long time to actually know how to use these tools. You just need to understand when a market is, let me actually draw it down. Yeah, you just need to understand when price action is going sideways and backwards, sideways and backwards, sideways and backwards. You just need to understand two things: that you shouldn't be getting involved in it, and there's something major that's going to happen to that market. And this whole sideways movement is at stage 1. And once that actual trend starts to form, this is only like the stage 1 of the stage 2 part. You don't want to get involved in it just yet. You want to let things play out and wait for it to hold. And once this whole thing is holding, then you can look to get involved if it's going long, in this case that I'm just drawing right here. So then that's when you'd find a market condition where now this is more potent than this. So this, you'd find better setups in an environment like this than you would over here. And that takes time and it takes experience, but hopefully you guys would get there. So hopefully this made sense. Hopefully you enjoyed this if you've watched this far. But yeah, that's how I anticipated the bullishness on gold. I think it's absolutely going to catapult itself to another all-time high over the next few weeks. That's my prediction. So yeah, anyway, cheers guys.